Welcome to the Contractor Success Map podcast. I'm your host, Bradley Hart, and I'm an expert on how you can get the most out of your contracting company. The reason I designed this show is to help you turn your contracting company from a people-dependent money pit into a process-dependent cash cow to have the freedom you dreamed of when you started your business. Every Friday, we're releasing podcasts with information to help you get the most out of your contracting company. Be sure to join us at www.contractorsuccessmap.com. and subscribe to receive our latest articles and special offers. And the best part, it's all free, just for you.
Hello there. Welcome back or welcome to our podcast. I hope you are doing great and in excellent health. This is Norhalma delivering our 633rd episode. You can listen to the other sessions on iTunes, Spotify, or wherever podcast content is published. They are non-sequential, so you can listen to the topics that interest you the most. Our blog post for today is about cash is king, but do you have a crown? Why cash flow trumps profit. Let's explore it. As a construction accountant, I've seen it time and again. A small construction company can look wildly successful on paper, reporting healthy profits year after year, yet consistently struggle to pay bills, make payroll, or invest in new equipment. How can this be? The answer lies in a fundamental truth often overlooked in our industry. Cash is king, and profit, while necessary, is usually just a loyal subject, not the reigning monarch. You can have a profitable project that leaves you cash strapped, and conversely, a company with lower reported profits might have a healthier bank account. This distinction is paramount, especially for small construction business owners in the US, where long project cycles, retainage, and fluctuating expenses can create a perilous gap between what you've earned and what you've on hand. We often emphasize this critical difference, highlighting that understanding and managing your cash flow is more vital for survival and growth than simply reviewing your profit and loss statement. Let's discuss why cash truly rules the construction kingdom and how you, as a small business owner, can ensure your crown jewels are liquid and accessible. The fundamental truth: profit is theory, cash is reality. Imagine you just completed a multi-phase residential renovation with a fantastic 20% profit margin. The client is thrilled, and your P&L looks great. However, if your contract stipulates a 10% retainage held for 90 days after project completion, and you have fronted significant material costs and subcontractor payments early on, your bank account could be dangerously low. You've made a profit, but you don't have the cash to take on the next big job, pay off a critical supplier, or even meet your next payroll. Profit is an accounting concept that measures revenue minus expenses over a period. Cash flow, on the other hand, is the actual movement of money into and out of your business. In construction, where expenses often precede revenue and payments can be delayed, especially with retainage, managing this cash flow is the difference between thriving and merely surviving. Pillar 1. Sharpen your job costing, the cash flow compass. The journey to healthy cash flow begins long before the first shovel hits the dirt. It starts with accurate job costing. As a bookkeeper, I can tell you that flawed estimates are a silent killer of cash flow. If you underbid because you didn't accurately track the actual costs of labor, materials, equipment, and subcontractors on past projects, you're starting in a hole. Know your numbers. Every single dollar spent on a project needs to be meticulously categorized and tracked against that specific job. This includes direct costs, labor hours, particular materials, subcontractor invoices, and even allocated overhead. Real-time tracking. Relying on memory or spreadsheets at month end is insufficient. Utilize accounting software like QuickBooks Desktop or Online, which are excellent for construction, to input costs as they occur. This gives you a real-time snapshot of your project's financial health. And inform your bids. Accurate historical job costing data is your most powerful tool for future bidding. It allows you to create realistic estimates that cover all costs and include a healthy profit margin, ensuring you're not unknowingly funding projects out of your pocket. Pillar 2. Mastering your money in. The accounts receivable offensive. Getting paid for your hard work is paramount. Construction payment cycles can be notoriously long, but proactive management of your accounts receivable can significantly improve your cash position. What to do? Structure progress payments, timely and accurate invoicing, proactive collections, manage change orders effectively, and the retainage hurdle. This is the most significant drain on cash flow for many construction companies. Retainage, typically 5 to 10% of the contract value, is held by the client until project completion, and often for an additional period after. Track it meticulously. Your accounting system must indicate the amount of retainage outstanding for each project. Know the release triggers. Understand the exact conditions for retainage release in your contract. Example, final inspection, lien waivers from all subs. And proactively pursue release. As soon as conditions are met, submit all necessary documentation to trigger the release of retainage. Don't wait for the client to remember. This often involves certified payrolls, closeout documents, and other compliance paperwork, especially on government contracts. Pillar 3. Strategic spending. The accounts payable defense. While getting cash in is vital, managing your money going out is equally important. This isn't about avoiding payments, but about optimizing them. Negotiate payment terms, pay strategically, maintain good vendor relationships, and prevent double payments and errors. Accurate bookkeeping prevents duplicate payments or payments for unreceived goods or services, which directly impact your cash balance. Pillar 4. The growth conundrum. Cash flow's silent killer. It sounds counterintuitive, but rapid growth can be fatal to a construction company if not managed with an ironclad grip on cash flow. Taking on more project means more upfront costs, increased material purchases, larger payrolls, and more subcontractor deposits. Increased working capital needs. You're funding new work before previous projects have fully paid out. And higher overhead. As you grow, your fixed costs, office, administrative staff, software, also increase, requiring more consistent cash flow. Many profitable construction businesses have gone bankrupt because they expanded too quickly without sufficient working capital or cash reserves to bridge the gap between expenses and collection. Pillar 5. Building a cash buffer, your financial safety net. Just as you wouldn't build a house without a strong foundation, you shouldn't run your business without a cash reserve. Establish a cash reserve. Aim to have enough cash on hand to cover 3 to 6 months of operating expenses. And line of credit. While not cash itself, a pre-approved line of credit can serve as a vital backup for short-term cash flow gaps. The bookkeeper's blueprint, your partner in cash flow control. This is where a specialized construction bookkeeping professional becomes indispensable. We don't just record transactions, we are your financial navigators. We do system setup, timely and accurate reporting. We provide cash or regular cash flow statements, not just profit and loss statements, giving you a clear picture of your actual cash movements. Cash flow forecasting. We can help you build realistic cash flow forecasts and predict what or when you'll need cash and when it'll arrive, enabling to proactive decision making. Compliance and best practices. We help you navigate complex invoicing, lien waiver requirements, and retainage release processes to expedite your payment. Conclusion. For small construction business owners, believing that profit is king can lead to a harsh reality check. The true monarch is cash. By meticulously managing your job cost, aggressively pursuing receivables, strategically managing payables, understanding the cash demands of growth, and building a robust cash reserve, you empower your business to weather any storm and seize every opportunity. Partner with a bookkeeping specialist who understands the unique financial rhythms of construction. And together, you can ensure your company always has the liquid assets it needs to survive. And that ends our blog post. If you want to discuss growing your construction business, please don't hesitate to contact us. You can call our toll-free number 1-800-361-1770 or our Washington State local phone line 206-361-3950. Our podcast promo code is still available for you to use. It's podcast20, PODCAST20, podcast20. Whether you need a bookkeeping template or would like to enroll in one of our construction accounting classes, you can avail that for a 20% discount. Links to our online store and academy are in our blog. On behalf of our team here at Fast Easy Accounting, this is Norhalma. Thank you all for listening. Stay safe and healthy.
And stay tuned for upcoming episodes on how to turn your contracting company into a process-dependent cash cow. Bye for now. Thanks for tuning in. You're listening to the Contractor Success Map. If you enjoyed the show, please leave a 5-star rating and review here on iTunes. And make sure to head over to www.contractorsuccessmap.com to subscribe to receive the latest articles and special offers. If you'd like to discuss your business strategy, simply click on the button labeled Strategy Session. And the best part, it's all free, just for you.